Well, that leads us right into our next guest. We have Miss Wendy Beerbower from EquityKey. So welcome, Wendy.
Thank you. Great to be here.
So tell us, for the listeners that are not familiar with EquityKey, or if they don't have Pandora and they listen to you come on every 20 seconds, okay, tell us a little bit about EquityKey.
So EquityKey is a financial product for homeowners. It allows us to pay homeowners cash today, and in exchange, we get a percentage of the future appreciation of their real estate. So if they have a $1 million home today, and that $1 million home grows to $1.5 million between now and the time that they sell the home, we share in that $500,000 of appreciation, and we pay them today in exchange for the opportunity to partner with them in that future. Right. It's sort of the opposite of a reverse mortgage. Mm-hmm. We're not eroding existing equity. We're simply just saying that we think over time real estate appreciates, and as it appreciates, we want to participate in that.
Right. And the appreciation, if I remember correctly, the appreciation is not necessarily tied directly to the home. There's an index that they work on. Tell us a little bit about that.
Sure. So there are several ways that you can measure real estate appreciation. One is to do an appraisal on the front end and an appraisal on the back end, and that sets the appreciation. The problem with that is, number one, it's extremely subjective. So everyone thinks that the appraisal on the front end is too low and the appraisal on the back end is too high, and that's not fair. And what if somebody takes money and they improve their home? Then how do you bake that into the appreciation? So we just said, that's all too muddy. We want to make this very clear, very transparent, and very simple. We use the S&P Case-Shiller Index. So some of you have heard about the S&P Case-Shiller Index. Every month they come out and give you an update on how real estate values in a particular marketplace have changed. They measure real estate in 20 different metropolitan markets around the country. And so what we've done is simply tied appreciation to exactly what the Case-Shiller Index for that particular market says real estate is done. So if Case-Shiller has gone up by 50% in a particular market, in the San Diego market, then we think that home has also gone up 50%. So it's very transparent. The homeowner can look it up every month. They can see exactly what's happening to real estate appreciation. And if their home does better than the Case-Shiller Index, which is simply an average of the marketplace, if their home does better, they keep all the extra above what Case-Shiller has estimated as the appreciation. It's really
What happens if we go through another bear market and the property goes down in value?
If the property goes down in value, we lose. Quite simply, we've put money up front for an opportunity to share an appreciation. If there is no appreciation, we don't get any.
And if it loses value, then...
If it loses value, we'll cover the downside up to the full amount of money that we've given a homeowner. So the easiest way to think about it is, again, I use $1 million home just because the math is easy, but if a homeowner gets $100,000 from EquityKey, and that home, as measured by the index, drops by $100,000, they're still whole.
Wow.
Because they got the $100,000 from EquityKey, we lost our $100,000 in that depreciation.
And try to do that with a home equity line of credit.
Right.
Just doesn't happen.
Well, we always say the nice thing about EquityKey is we're very well aligned with the interests of the homeowner. When the homeowner wins because real estate goes up, we win. When the homeowner loses because real estate goes down, we lose. So our interests are aligned, very much unlike a bank loan where they're going to get paid no matter what's happening to real estate appreciation or depreciation.
You're more of a partner than a lender.
Exactly.
That's awesome. You're listening to Close Up on San Diego Business here on KCBQ, streaming live at AM1170theanswer.com. Give us a tweet at CloseUpSD. Email me at barry@closeupsandiego.com or find our page on Facebook. We want to hear from you. I'm your host, Barry Waxler, here with my co-host, Andrea Kay, Urban Miaris, and our guest is Wendy Beerbower from EquityKey. So EquityKey can do a lot of... What can I... If I'm a homeowner and I borrow from EquityKey, or not borrow, partner with EquityKey.
Correct.
Okay. What can I use that money for?
Well, you made a good clarification. You're not borrowing anything. We're actually buying something from the homeowner. We're buying a right to share in the appreciation. And so we're paying for that. So there's no payments. There's no interest rate. It's not a loan at all. There's no debt. It is a partnership in that. And so you can do anything that you want to with the money. I'll give you a couple of good examples. Because you're focused on San Diego business, let's talk about business owners who are having a really difficult time getting credit these days. If you're self-employed, it's very, very difficult to get money. So we had a homeowner who, he and his wife have owned their own business for 30 years. They lost their number one client, and they had to sort of rebuild. And so they took on a great deal of credit card debt to keep their business going while they rebuilt their customer base. They did a deal with EquityKey. They were able to take money from EquityKey, pay off all of their credit card debt, and now because their credit card debt was all gone, their credit improved. Because their credit improved, they could now refinance their first mortgage to a lower interest rate. Their net gain in cash flow was $5,000 a month to the good.
That's incredible.
Because
That's incredible.
they were able to wipe out that debt and really improve their position. And as small business owners, they had no other options. There was no other way for them to do that. So it really worked out beautifully for them.
Yeah, and you've changed something. I'm not sure how to explain it, but you've changed something over the course of the last few months where it used to be you had to be an accredited investor to do this, which accredited investors mean you have a net worth of $1 million or certain levels of income. Anybody can do this today, correct?
Correct. Now, we're going to look at the home, and the homeowner must have at least 20% equity in the home when they come to us. So they do have to come to the table with some equity already built up into the home. But what we're seeing much more than that is people who come with a great deal of equity in the home. In fact, I just completed a deal with a woman who was in my office earlier this week, and she said the most profound thing. She said she's in her early 70s. She said, Wendy, I've spent my whole life building assets, trying to grow it. She said it suddenly hit me that I don't need to grow my assets anymore. I'm in the position now to start spending down the assets. Mm-hmm. And she said that shift in my mentality was really an eye-opening thing for me. So she said, EquityKey is perfect. I spent my whole life building up all this equity in my home. Now it's time to get some of that back out.
And what's she going to do with it?
Down. She was paying off some debt as well, but she also was helping her children some, so a grandchild with some college education funds, which we think is a fantastic way to do that. But she said, I'm able to now free up some cash that I can help my family with while I'm still alive, while I'm here. Mm-hmm. And she said it just is profound for her.
That's great. Well, explain for me real quick, why EquityKey would be more favorable than, let's say, a reverse mortgage. That's a very popular tool these days.
It is a popular tool. So it depends on the client, which is more favorable. But the couple of things about EquityKey that are very different than a reverse mortgage. Again, a reverse mortgage is a mortgage. And while there are no monthly payments being made by the homeowner, the monthly payments are being made by the home. And so equity is being eroded in that home. With EquityKey, there are no payments at all. We're simply giving the homeowner cash. We're sitting in the background waiting for that home in the future to sell or transfer, and that's what ends our contract. So we're sort of going in opposite directions in that case. But secondly, a lot of people, particularly in California where home values are higher, can't qualify for a reverse mortgage. Because what a lot of people don't understand is that all of the current mortgage on a home has to be settled in order for you to do a reverse mortgage. So everything else has to be paid off with funds from a reverse mortgage. So if somebody has $1 million home and they owe $500,000 on that home, they typically can't qualify for a reverse mortgage because they owe too much on the home. That's a perfect deal for us. It's easy for us. A homeowner with $1 million home can get up to $172,000 from EquityKey. And again, no payments, no interest, and that's theirs to do with whatever they want.
How often could they do that? Could they come back to EquityKey a couple of years later if they've got that much equity? Is it just a one-time only opportunity for EquityKey, or is this something that people can tap into?
It's one time on each home, but we'll work with people's primary homes, secondary homes, vacation homes.
Oh.
So we've and if somebody does a deal with us on their primary home and then they decide to move and rent that home out, they can continue in that deal with us, move to a new home, and start a new deal.
Really?
Absolutely.
Because there's a lot of people in San Diego that, are cash poor but property rich, where they've got multiple properties in San Diego, and they just don't have any way to tap into the equity.
Well, the frustrating thing for homeowners is they've always had two options. They could go into debt, or they could sell. And those are the only two ways to really access capital from your home until EquityKey. And so this is now equity financing. This is a way to get additional capital by selling some equity in the future value of the home.
And are there any restrictions on how to use the money and what you can use it for?
None whatsoever.
So I could just go take a trip to Europe.
I wish you would.
What position does EquityKey take in the home ownership?
We're going to file a performance deed of trust on title. So we do record on title our position, but we'll subordinate to the existing loans on title.
So Great.
Wow.
Well, we're starting to run
Amazing.
short on time. Tell our listeners how they can find out more about EquityKey.
Great. Go out and then check us out at EquityKey.com, or you can call us at 619-400-8960. And we'd love to talk to you more and let you know whether or not you qualify for EquityKey.
Great. And you work through a lot of financial professionals in each one of your market areas, correct?
Absolutely. With mortgage professionals, real estate professionals, life insurance professionals, financial planners, CPAs, absolutely, are letting their clients know about this.
Yeah.
And is this all over California or just San Diego County area?
It's all over California, in New York, and in Florida.
Great.
Boy, I think about all the businesses I've been in. Where were you 45 years ago?
I know, right? That's what everybody's listening thinking right now.
Yeah, well, Urban, you're probably fortunate that they weren't there for you because you'd have more boats sitting in the boatyard there. So, great. Well, Wendy, we appreciate you being with us, and hopefully we can get you back on a regular basis because I love what EquityKey does.
Fantastic.
It's unique, and I would love to have our listeners learn more every week.
Great. Thanks for giving us an opportunity to get the word out.
Great. This is Close Up on San Diego Business here on KCBQ, streaming live at AM1170theanswer.com. Send us a tweet at CloseUpSD or just find us on Facebook. And you can always email me at Barry@CloseUpSanDiego.com. Let me know what you think. I'm your host, Barry Waxler. We'll be right back after a word from our sponsors.